Hello and welcome to Macro Mondays, brought to you by David Gokhshtein, the Gokhshtein News Network. I'm your host, Landy, and today is March 2nd, 2026. And we're going to take a look at Bitcoin here. We'll take a look at a few other markets as well. This is going to be a quicker one because I have some things that I'm doing in the background here that I have to attend to. But all of the targets that I talked about in Friday's video are still valid and still on the board. We saw a move to some of the key areas that I spoke about across various, equities, indices, commodities, and of course, Bitcoin. The conflict in Iran or between the United States, Israel, Iran, and other players now entering doesn't change that too much. The charts are going to tell you kind of what is going to happen next in terms of what to expect, as the market is forward looking and the market was not really surprised by the actions that were taken over the weekend. So, anybody that's really acting surprised apparently wasn't paying attention to the massive buildup in the Middle East. So, as it relates to markets here, Bitcoin did close underneath the 200 period exponential moving average on the weekly. Not too much has changed in terms of the setup. If we do see Bitcoin trading back below, right around $69,000, it's currently at $69,000. No, I'm sorry. It's like right on it. We're looking at 68,300. Sorry. So 68,300 is kind of where the 200 period exponential, if it closes back under here, especially towards Sunday, or is back under here towards Sunday, the lower second standard deviation is now right at the low side structure here between 58 and 60. So that has not changed anywhere below there. I'm still looking for, the the mid 50s to low 50s as an area between, essentially 55 to 58. If it did lose that area, then we're looking, 52.5 to the the 48 to 50 range down here by the 377 exponential moving average. And this is going to be something to pay attention to. That if we were to see like a straight shot down and not just a grind down, be aware of the 46 to 48 if that were to occur, like anywhere below, 48 to 50 down here. So essentially, to the downside, pay attention to 58 to 60 around the 200 period simple and the lower second standard deviation and the low here. And then anywhere below the 200 period simple, which is below 58, start to look towards this close on the weekly around 55, 54, 55 to 52 and a half, anywhere below there, 48 to 50s in the cards. If that starts to get lost, 44 to 46 would be the next area. To the upside, locally here, if we did breach above the, I would say on the daily, it's got to be 72.2, but if we see closes above around 71,380 by the end of the week, we're either already looking at the $73,000 to $74,000. I would put it more at like a swing around 74 to 75, somewhere around this high and this low. And anywhere above there, I'm looking for, 78 to 80 to come up and test this low up here that was lost. So not much has changed. And, I think that there is the possibility that we could see a low set here. I've mentioned this before. It could be something that we start to see play out this week, especially if the daily starts to get above that 72.2 and start to push towards 74 to 75, right? It can even swing above. There's weeklies at 76.5 to 78, but realistically above 75, I'd be looking 78 to 80 as like a primary area, 76.5 or so being kind of the midpoint between them to pay attention to on lower term time frames. But I'd be more thinking about where the weekly could end up. And weekly could turn up on any closes above $63,000 this week. We'd be looking at crossing above the signal line for the EMA at 71,800, so about 72,000. So essentially, everything's pointing to, if we were to break above this week, that 72.2, we'd set a major low and then go up for our bearish retest, mid 70s, then 78 to 80, potentially more in the cards there as well. The 100 period exponential and the basis here on the weekly right around $85,000, $86,000 being a key weekly there as well. So just pay close attention. And when you're perusing social media, understand that, it's fog of war. Take everything you see with a grain of salt. You're going to see a lot of different reporting and a lot of different arguing about who, what, where, why, when, who's right, who's wrong. Take everything with a grain of salt, especially as it pertains to markets. Markets are forward looking. So a lot of this in markets was already priced in. It's all about, do we get the break to go lower or the break to go higher? And that's going to really occur on daily closes. So if we go to the daily here, it's very easy to see the setup here, and I'll go ahead and turn on, you have to forgive me, this isn't my normal setup, but I did pull out the mouse and everything for this. All right, so bottom side on the daily here, if we were to see the low at 62.5 taken out, which is basically right around the close open low on the daily, then I'd be looking for that 58 to 60 on expansion. And then to the upside, and then of course following targets below there, 55 to 58, and then 52.5 to 55, 48 to 50, so on and so forth. To the upside, back above around 70,500 or so, I'd look for the highs to get swung, especially above this high here, around 71. Then I'd be looking for 72.2. Any closes above right around that 70,300 or so though. And I would be looking for expansion into that 72.2 area, and then looking for 74 to 75, where we have the 55 period exponential. Above there, we have the 50 period hanging out in that 76.5 region. So be aware of that. We have, and this is set up for a bearish retest, by the way. It could go all the way up and test, 78 to 80 and even more on expansion. But, just beware that is a bearish retest. And at minimum first pass, you need to be careful. If you're trading it up there, or you're trying to jump in late and scalp or something, just be careful on the long side if it did head up. All right. What do I want to look at here? That's pretty much all I got for you on the daily and weekly here. There's not too much that has changed from what we've talked about prior. We got our move to the 5400, 5420 area with a spike of the actual close open. I talked about this last week. Be careful. This is really looking like it needs to close now above there on a daily. It can swing all at once, but it needs to close above 5420 to actually go up to the 55 to 56 area and test the high. Above there, we can start looking, 57, 58, and then 58 to 6K. Needs to hold the higher low now at right around 5100. So if it loses it, it can be saved on the basis as long as it doesn't close below the basis here at right around 50,060 or so. It can actually head all the way down to right around 49 and still be safe, but it's this low is going to be a bias breaker on lower term time frames. And then on the higher term time frames like the daily, it's going to be 48.40. Anywhere below there, and the 55 and 50 here, the lower second, it's expansion down into the mid to upper fours. So silver hit our area here, 95, 96. Pulled back, trading under the 414, the 1414 in this case, and same kind of deal. In this case, I'd be looking, 80, 84.50 to 85. Anywhere below there, we're probably headed down to $80, and then start looking mid 70s from there. To the upside above 95, look to 98 to 102 by the upper third. Oil. Oil is interesting because it settled in our area that we talked about, just slightly above. I was, shorter term time frames looking at 68 to 70. And of course, it opened in a very key area overhead. So let me take and turn on these zones of interest here. And you'll see that we have 74.40 to 78.40. You can call it 75 to 80. This can easily go to 80. It is expansion on the daily, so it can stay up here, and as long as it's trading above 70, it can keep heading up to the mid 70s to upper 70s, and then anywhere above there, you're looking for this to break right around $80.73 to go test, the mid 80s or so. Pretty simple setup here too. And that would be back below 63.60. So it's got room to even retrace back down above 63.60 or so, 63.5, looking fine. Caution below right around 65. If it starts to drop around that 66.40 and head towards, 65 here in the basis, then it's likely going to start testing down towards that low at 63.50, 63.60. So, and I wouldn't be surprised to see that, but it very well could, considering the environment globally, could very well try to plumb the highs first again before the pullback. And realistically, yeah, you got to see above 75.33 to start seeing that 78 to 80 in the lower term time frames. And, just watch 65 as kind of a lower term time frame bias breaker to test that low. And natural gas starting to carve out around the lows back above 330. We could be looking 350, 360, and then potentially up to, 390 to $4. And if it fails here, I'd look for it to push down to the mid $2 region. Anywhere below 270, I'd be looking for 250 or so, and potentially roping in 230 to 240. In traditional markets, Dow hit our downside target. Our line at 48.4 or so, and swept under it to, what did we get there? 48.377. Anywhere below there, I'd be looking, 48 to 48.1. You could technically see a run down to the upper 47, like 47.8 to 47.9. Don't want to see closes below the 100 exponential. That will start to look like this is going to want to roll right over on any kind of retest back up. But for now, it's fine. Look for anything above 49.6 to go and test the highs here around 49.8 to the 49.9 rejection up here. And then potentially back up to 50K to that 50,500 area. NASDAQ hit the mid 24s at 24.6 and 24.5 area. Anywhere below that, we're looking for 24.4. Anywhere below there, we're looking for expansion into 24K. Back above the highs here, look for 25.350 or so. That would be good to at least test the 25.5, 25.6 area up here by the upper second. SPY, pretty easy to read. This actually held up a little better. So spiked the 678, 680 region where the open came in. Closed right below the basis band. If we do see it trading back above 690, look for 693 to 695, and then right back to the highs around that 698 to 700, and then possibly above there 702 to 705 area. If we do see it drop this 675, I'd be looking down here. I've said it before, 670 and then mid 660s before headed down to 660 and up and mid 650s, which would be basically dropping the 100 period on expansion through the lows at 675. We'd be looking for some pit stops somewhere around 665, 670, and then potentially down to the mid 650s. But if it does hold up here and just consolidate and start going back to the upside, 693 to 695 is going to be the big one to watch for an expansion back to the highs. And then anywhere above there would be an actual true expansion of volatility to the upside to the low 700s. And that's pretty much all I got for you today. I will be back on Wednesday for the Wednesday check-in. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, stay safe. And if you are overseas, please stay safe as well. My thoughts and prayers go out to all of the military service members, especially those who have lost their lives, and to those who are in conflict zones, innocents in conflict zones. So praying for you all and your families. And I'll talk to you again on Wednesday for the Wednesday check-in. Go ahead and like and share this out there as well. Thank you very much. Take care. Landy out.